Good morning, everybody. Happy Tuesday to you. It is January 12th, and we are finally in a new year. 2021's finally arrived. Anyway, I want to jump into our market report. Got a lot of stuff I want to cover with you guys. I don't want to waste any time doing it. We're going to start with a brief look back at what happened in 2020, some of the things that it meant, and just the highlights of it. And then we'll get into the forecast of what 2021 could look like for us in the real estate market. Anyway, to start off, I started with just a few of the high point slides from last year. I shared this with you guys in some of my other market reports, talking about annual home price appreciation, how that looked in the year 2020, the lows that we saw in home inventory and some of the challenges that has presented to us, as well as the tremendous amount and the rates of rise of home equity. Really good stuff. If you guys want to take a closer look at any of these, by all means, hit me up and I'll shoot you the data on this or some of the slides, whichever you like. So take a look at this. As we started the pandemic recession, so this is what you're looking here at is as of March 2020, at the very beginning. This was looking back on the previous 5 recessions and what they did to home prices across the country. And then, of course, most infamously here, we're looking at 2008, the great housing crash, and how we saw a record drop in home prices, almost 20%. It was catastrophic. This is where we are now, looking back at the previous 6 recessions. This is what home prices did throughout the pandemic recession of 2020. We actually saw a 7.3% jump in home price change, which is great, right? Just a little bit of context with that. Now, I want to dive a little bit deeper into it, though. Home equity, which it's obviously one of the most important factors in our real estate market, was really sort of the MVP. It was like the star player in 2020's real estate market, and I want to get really deep into it. So this is what Frank Northrup, he's with CoreLogic, had to say. Over the past year, strong home price growth has created a record level of home equity for homeowners. The average family with a home mortgage loan had $194,000 in home equity in the third quarter. So as of the third quarter last year, if you remember, that number before was $177,000. Now that has been projected up to $194,000, which is awesome. He goes on to say, this provides an important buffer to protect families if they experience financial difficulties and is one reason for the generational low in foreclosure rates. Now, I want to add some context to that last remark there about the foreclosure rates. There's been a moratorium on foreclosures. Our government, along with the big banks, they instituted the forbearance program, which I don't know how familiar you guys are with it, but it's just a great program that defers late mortgage payments until people are able to get back on their feet. But it's been their equity. It's been this huge amount of home equity that's continuing to help people weather that storm, relative to things that they may be experiencing as fallout from the pandemic, lockdowns, work shortages, the challenges that it has caused businesses and our economy across the country. Looking more at info from CoreLogic, $17,000, man. That's the average gain in equity on mortgage homes across the country. Okay. We just talked about $194,000 being the average of a home with a mortgage on it. How about this? CoreLogic is saying that 38.2% of all homes in the United States are owned free and clear, no mortgage. That's incredible. 10.8% saw an increase in equity, totaling over $1 trillion total across the nation. Tremendous growth in equity across the United States. So, and let's look at that across the country, and especially here we are in Tennessee. Here we are in Tennessee with a nice, modest, average year-over-year equity gain of $15,000. What does that mean? That means that if you own your own home, the average amount that you could stand to gain in equity was $15,000. If you don't own your own home, if you're still renting, you're on that hamster wheel of renting your home, this is what you're missing out on. Okay. And you need to talk to me. All right. I want to show you some more information like this and just to help you understand that this equity gain is how you can build wealth from just where you live. So this is great. This is great information. So going into a little bit further, as we look forward, the most recent home price expectations survey shows us that over the next 5 years, the average home, a $300,000 home, if purchased today, that homeowner stands to gain in appreciation over $50,000. Okay, $54,221. That's awesome. And adding to that equity. So Frank Martell, he's the CEO of CoreLogic. He said this: the housing market has remained a strong pillar in an otherwise tumultuous economic year. A sharp rise in demand spurred by record low interest rates continues to bolster homeowner equity. And with many people now spending more time than ever at home, some homeowners have tapped into their strength in the equity to fund renovations. So what are we looking at? What's in front of us? What does this mean for 2021? Well, this is not an exact science. These are our best forecasts, but let's start with home builders, new construction. Mark Fleming from First American said this: despite the best of intentions of home builders to provide more housing inventory, the big short in the housing supply will continue into 2021 and likely keep house price appreciation flying high. So we know, home builders are building. They're starting new construction, building new projects. We've talked about builder confidence, the amount of starts that are happening now across the country, those being well above where they were a year ago, which is a good thing. And above all, that's going to bring more inventory back onto the market. But the challenges of this inventory, which is still short, by the way, certainly are in the first half of the year, are expected to persist. Okay, so it's going to keep those home prices up because we're still going to have a short in housing supply across the country. Moving on, our 2021 home price forecast, we can see it here. If we look anywhere, it's anywhere from 2% growth to 6% growth. And if you're looking at this, so from the National Association of Realtors to the MBA and everything in between, if we take out the two on the end, 6 and 2%, we see probably anywhere from 3 to 4%, somewhere in this range. Okay, still awesome growth. It's not going to be the 7.3% that we saw last year, but it's still going to be around that 3 to 4% home price increase, which is awesome. It's awesome. Now, what about mortgage rates? What's it going to cost you as a home buyer? Well, here's the reality of where we stand today. Treasury rates have been moving up since the election, according to Michael Fratantoni with the MBA. Moving up since the election, according to the MBA, but mortgage rates have kept going down. So, side note, that's because the federal government is pinning down mortgage rates by all the action that they're taking. And they're taking this in the secondary bond market. Anyway, Fratantoni goes on to say, we're going to start to see the mortgage rates drift up with treasury rates as opposed to moving in the opposite directions. Now, I'm not sitting here trying to forecast mortgage rates. Okay, I'm not a lender. I'm not a mortgage broker. I'm a realtor. Okay, but the outlook as the economy improves is that rates will rise. Okay, and I think that as we look into this year and further on into 2022, we're calling for home price appreciation, and experts are saying that those mortgage rates will rise. Still going to be a good mortgage rate market. Still going to be, it's still going to be a great environment for buyers, but they will rise. Okay, take a look at this. Just to give you an understanding, and this is a calculation I've got here based on interest rates, what they are today, and where, along with home price appreciation, along with the increase in interest rates, where they could be a year from now. This is where we could potentially be. So if we take a $300,000 home, okay, let's start right there. With a 30%, 30-year fixed rate, 2.7% rate. This is about what your mortgage payment's going to be. This is what your, obviously the principal and interest payment, you're going to be a little bit over $1,200. Okay. But if we take the 2021 fourth quarter estimate, according to Realtor, and say that along with, the around 4 to 5% home price appreciation, along with the jump in interest rate, you see here, we're jumping here to 3.4%. This is what that translates out into you for in what your monthly payment is going to be. That's almost a $200 increase in your payments. That translates out into almost $70,000 more that you're going to be paying along the life of the loan over 30 years. That's real cash, and especially when you stretch it out over that long, it's a lot of real cash. So the sooner you buy that house that you've been thinking about, the better. The more money you're going to save, the more money you're going to earn in equity. So anyway, wanted to kind of wrap this up. Had a lot of quotes for y'all. Have got one last one here. This is from Jessica Law. She's with NAR. I do believe that the American dream of home ownership is very strong. It's very much alive from all the survey data that I've seen. If you're not a homeowner, you want to be one in the future, whether that's a short-term or a long-term goal. So, guys, if you're thinking about buying a house, now is the time to do it. It's only going to get more expensive the longer you wait. And it's going to be less money that you accumulate, less wealth for your family in equity that you're missing out on. So I want to talk to you today. We've got some great options, great communities, great strategies that I've set up for us to find that perfect house for you. So I hope you've enjoyed this market report. I think this might be the shortest one I've made yet. So I think I'm getting a little bit better and more concise at them. But anyway, I appreciate y'all's time. You guys have a wonderful and happy new year. And as always, give me a shout if you got any questions or you want to talk. Have a good one.